in the coming weeks around those particular price levels. Okay, and we're going to do that now. Now, I'm not going to beat it to death in terms of what uh, reaction levels and what support resistance levels we should have noted on our chart. But if we were looking at this example here, and this was real time in the time of you sitting down in the front of the charts, or when I would be sitting in front of the charts, this is how I would mark up my charts. Okay, and we're just going to use the full horizontal line just to save time, because I spent a lot of time monkeying around with adjusting the right end of a trend line. Now I do like the trend lines because it makes it neater when I'm drawing horizontal support resistance. Now I don't like trend lines on a diagonal basis, so don't get me misquoted here. I do not have faith in diagonal support resistance, but I do have absolute faith in horizontal support resistance as we have here. Now what I'm doing is I'm noting every swing high and swing low. That's relatively close. And we're going to use about 300 to 400 pip range from where we're trading at in this instance here. Now obviously you can see at the time of this recording the price is already down here, but again I'm going to counsel you to go back to the recording and you'll know by watching it that we called this market going lower here. Okay, so we have this reaction high here. Okay, we have a swing high. Now what I'm noting again, so you don't lose yourself amongst my banter here, I'm looking at times where candles have two higher candles on both sides. Okay, not two higher on each side, but two higher candles on one side. In other words, you have a candle with a higher low on the left and a higher low on the right. Okay, and I'm pointing at this probably it's probably confusing because it's not what I'm showing you here, but this is a Sunday candle, so you got to take that in consideration and blend that into this Monday. So you do have the swing low here basing this Monday candle and this Thursday candle here, and this is a Friday candle. So you have that swing low. Okay, so we'll have that noted. Okay, and we're going to use this high here. Okay, and you see this one here? Now I realize you're probably starting to think, well, wait a minute, this is getting really busy here. Okay, but what I want to draw your attention to is the fact that we do have these levels turning the market on a daily time frame. Okay, so if the market made its daily high or low there, okay, it's significant. Okay, now this is a moment where you pull out your pad. Major reaction levels, okay, occur around annual highs and lows. That means yearly high and low, quarterly year high and low. In other words, every 3 months, okay, for instance, January, February, March, in that block of time calendar basis, okay, find the highest high and highest low, highest high and lowest low in that time frame. Do the same thing for the second quarter, okay, that being April, May, June, and then July, August, September, and then October, November, December. So those 4 quarters in blocks of three, okay, because there's a quarterly shuffle that goes on, okay, portfolio dressing and such, and you'll be able to see significant highs and lows. And we're not going to do that here. This series is meant for you to get your sleeves rolled up and do some homework on your own, okay, and you're going to learn by doing it. Okay, I'm leading you to the water, but it's up to you to drink, okay? You also have monthly highs and lows. Those are key, important reactionary levels. Okay, and then you have weekly highs and lows, and you have intra-week highs and lows. Okay, so in other words, once we get to like Wednesday, whatever the highest high and lowest low was at that time are influential. Okay, and then you have your standard daily highs and lows. Okay, and here is one of the gold nuggets that you're going to get. Okay, whenever you see a swing high, okay, a swing high like this, okay, we have a candle here with a lower high candle on the right of it and a lower high candle on the left of it. Okay, this pattern is very, very strong. And the reason why it's so strong is because you have to take a couple elements out of that pattern. Okay, and we're going to start with the first candle here. This candle on the left of the swing high. Okay, you want to note the high the open, the low, and the close on this candle. You want to do the same thing for the highest candle in the 3-bar pattern, and you want to do the same thing to open, high, low, close values on that same basis. Okay, and whenever you see a swing high on your daily time frame, you really want to have those data points. Now essentially we have the high here with this horizontal line, and we essentially have the open, we're here with this line, okay, but it was based on this candle here. Now we have to have the low, the low here noted as well. Okay, you can see that happening right there. Now I'm eyeballing it, true, but we can go down and doctor it up when we get down to the lower time frames. But here's what I want, just by clicking that like I did here, I want you to take a look at what happened over here in these candles. See the bodies, they were having difficulty closing and opening far beyond that level. Okay, something about these levels, okay, causes the marketplace to turn. Okay, and we're going to talk more specifically about that phenomenon, okay, and another smart money concept applied to where markets tend to blast off and have you a trade opportunity presented to you, and you can see things in advance based on what I'm going to share in this episode here. But I want to show you how sensitive these levels are. And then obviously, because we have this market open on this candle here, if you go over here, look what you did. You have a bounce right off of that. Obviously, we can see that the close of that candle and that swing high, we were opening essentially near that same point and went lower. The candle here was unable to make much move higher. We fell short of it here. The body of the candle here as well. Okay, so there's a lot of insight that is gleaned by doing these exercises, but it's also a daily procedure. Okay, but here's the cool thing. Once you have these levels noted, okay, these when they're a lot of them like you see here, this is when you take your data and you write it down on your pad. Okay, and in that way, when price trades to these levels, okay, or approaches these levels, you'll have that in mind. So, okay, look, this is a reactionary level based on a daily time frame. So that way you don't have to have all these lines on your chart. Okay. So what we're going to do is we're going to take our chart and we're going to drill down to a 4-hour basis. Okay, and we're going to be just simply looking at uh, the the market from the standpoint of August 23rd. Okay, and what I did was I just moved the fixed chart position, and it's just a little difficult to see here, but I will show you all that when I talk about setting up templates for MT4 and how you can maneuver around. So we're going to do a 4-hour chart. Okay, and here we are. We're essentially with these same levels noted, we move down into a 4-hour basis. Okay, and what I'm just going to do is I'm going to scrub forward a little bit. Okay, and right about here is where we were talking about how the market was poised to trade lower. And I'll promise I'll get to the point of which we're going to explain why it was going to go lower. But for now, I just want to just illustrate how the market eventually traded with these levels. Okay, now these levels were based on key reaction levels on the daily time frame before the fact. So in other words, we're going to basically establish a point of which we'll delineate that with a vertical line here. We'll just say beginning here, you know, we were expecting the market to go lower, and we're going to start watching and just going to study how price reacted to these levels going forward. Okay, and really what you're doing is you're looking at how price moved, reacted, traded down to and up to resistance and support, how price worked specific levels, broke down, found support at it, then broke lower and moved around and gyrated. Okay, now these levels are just simply established off of the daily time frame. Now when you move to a 4-hour, okay, like we learned in the previous 2 episodes, when you break your market down from a daily to a 4-hour, the 4-hour is going to have more dynamic support and resistance levels that were not as clearly discernible as were on the daily chart. Okay, so this level here, okay, you would have on your chart as well, and you can see the price reactions from there as well. And you have this swing low. One could have that on your chart as well, and you can see how price reacted around that as well. Okay, and now what we're going to do is we're going to move to a 15-minute basis, and we're going to look at last week's trading. Okay, this is last week trading the Euro USD. This is a 15-minute time frame. Now what we're going to do is we're going to put the vertical lines in, delineating the actual days. You have Monday's trading here, Tuesday's trading here, Wednesday, Thursday, and then Friday down here. Now we're calling the market lower, and you can see the market did in fact trade lower. We're going to be looking at how price reacted intra-week, okay, but we're going to talk about some things that haven't really been touched on if you've been following me for a while in great detail.
เชื่อไหมครับผมดูหนุ่มขึ้นได้ภาย